Saturday, May 25th, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start, I'd like to thank all my long-term subscribers and viewers, all the new subscribers I've been getting, all the interaction I get through comments, through participation in the live streams, all the support that I also get through donations, through my PayPal account, through my Patreon, through purchasing of maneco 64 merchandise in the Teespring store. One of my favorites is the End the Fed mug that I have here. End the Fed. It says robbing Americans since 1913. And then home of alternative economics and contrarian views, and maneco 64. I've also got some Billy merchandise, Billy mugs, Billy t-shirts, and other interesting things if you like to have a look. It helps the channel. I also like to thank a lot of the viewers back in January on the live stream. A lot of you told me I never see your adverts because I do monetize my videos, and I was able to fix the settings. So I know some of you don't like the adverts, but you can always skip it. I don't put all my adverts are skippable. So thanks again. This afternoon I want to talk about a bit about the markets, what they did last week. I want to look at the technical picture for things like gold, the pound, silver, gold in British pounds, and so on. I want to look at the statistics, the economy in the US, in the UK, and what I see going forward. Look at the yield curve, especially what happened this week. That's very significant in the US. And then I want to look at also the cover of this week's Economist magazine, which I just received today. And here it is, the great jobs boom, according to the Economist. And I did read the leader, as they call it, about this cover that they have, and I will talk a little bit about it and what I think about what they're saying. Could this be a contrarian indicator for a massive recession or depression and big joblessness? It could. I mean, a lot of these publications are known to come out with these headlines at the very juncture where things change. I think like Business Week and Forbes or Fortune. So quite interesting. So let's start with the markets this week. The most significant thing I saw this week was the US Treasury yield curve. The fact that it's inverted from 1 month to the 10-year. So let's have a look here. And that's very significant. I think there's no way out now. I think the US economy and all the rest of the world, Western Europe, the major economies in the world, are going into very sharp slowdown, and if not a recession or something even worse. We haven't really had an accident yet. I think the accidents are going to start happening. We're seeing here in the UK already British Steel, Metro Bank, Thomas Cook, all the troubles with those companies in the US as well. We're seeing a lot of retail stores shut down. I mean, also a lot of credit card, how can I say, unpaid debt is rising. We've seen the statistics this week, not very good. I'll look at shadow stats and see what John Williams is saying as well. He's got something to say about the statistics last week. So yeah, look at here, the 1 month T-bill yield is at closed at 2.368%. last week, and the 10-year closed at 2.324. So we are inverted by over 4 basis points. Of course, that could quickly disinvert, and the curve did disinvert a few weeks ago and went upward sloping again. But I think the die is cast now, and the economy is going to slow down. There's no way they can get out of it. Some people think, like I saw Gerald Celente. I haven't listened to him recently. My wife does, though. She was listening to him this morning, and he said, yeah, the markets are going south. The economy is going south. We're going to have a war. I'm not too sure about that. I don't tend to think we are going to have a war. From what I've been reading, the neocons in the Trump administration are actually, they're striking out. They struck out in Venezuela. Here we are almost in June. They tried to get rid of Maduro back in January, February, and Maduro is still there. Their puppet Guaido is kind of has no credibility, so that's strike one. I think also in Iran, John Bolton is very keen on starting something over there against Iran. But I think reading what's going on now, like the Secretary of Defense, the acting Secretary of the Defense in the U.S. Said that the U.S. is trying to avoid conflict with Iran. So I think they're going to get their second strike, the neocons. I saw that Senator Rand Paul had tweeted President Trump saying, don't listen to the neocons. And I think he meant John Bolton. So that's why I don't think there's going to be a war. Of course, the China trade war situation isn't good, but I can't see really a kinetic war starting between the U.S. and China. I could be wrong, but that's the way I feel about it. What about the statistics, economic statistics this week? Let's have a look at here. I'll have a look at some of the UK and some of the US as well. So Tuesday last week in the US, we had existing home sales, and that was expected to rise by 2.7% for the month of April, and it actually dropped by 0.4%. So that was quite significant. Then Wednesday, let's see what we had on Wednesday. This was an interesting day for the UK. We had what we're told is inflation numbers. And why do I say that? Well, because inflation is the increase in the money supply and credit. The rising prices are a consequence of that. There are the measures like that. We have CPI, but they call it inflation. But in the UK, up until 20 years ago, they used something called the retail price index, which they still publish, but they don't look at it anymore. Like the government doesn't use it, the mainstream media doesn't use it, economists don't use it. And don't forget, we've got the 10-year yield in the UK, government yield, the gilt yield, at just over 1%. We got the Bank of England rate, I think about 3/4 or 75 basis point, so below 1%. But so where did the RPI, which in my opinion is a better measure of rising prices, that was it came out this Wednesday. It was expected to rise 0.8 on the month and 2.8 on the year, but it came out 1.1% on the month for April. That's not year on year, that's month on month, and it was up 3% year on year. And I think even that number is underestimated. They use a lot of gimmicks for the statistics. So can you imagine UK savers are, they're being robbed in broad daylight and they don't realize it. When the cost of living is going up at least 3% and they're getting 1 or less percent for their money, for the capital that they've saved over the years. That's why I recommend not only in the UK, but especially in the UK, that people have some kind of holdings of precious metals, of gold and silver, because historically and over the long term, there's only one way to protect yourself monetarily against inflation, the debasement of the currency, and that's holding gold and silver. With that, I'm just going to quickly look at the how gold has been doing in British pounds. It had a pretty good week this week. The last 3 weeks, you can see here, we've traded from below around 970, and we're now back above 1,000, 1,009. The key levels here on the upside is just above 1,030, and then 1,065. Below, of course, the support now will be 1,000 and then 970. Is it important to keep an eye on the technicals? I like to do it because I worked in the financial markets. I did a lot of research, technical analysis, fundamental analysis. But this shouldn't discourage you. The up and down movements in the price of gold discourage you from putting away some of your savings if you're able to save some of your efforts that you put into life, that you receive in Bank of England notes, or which isn't really money. I do think it's important that I personally try to get as much gold and silver as possible as a way of saving and protecting myself against inflation. I started buying gold and silver back in 2002, and at the time, 1 ounce of gold was costing around 220 pounds. We're now at 1,010, even though we've had a few moribund years in the gold market. It still protects yourself, and it will protect you even more. I remember also when I started purchasing gold and silver in 2002, it wasn't until 2006 that it really started taking off, and it was quite frustrating. So you need to be patient. So you can see that you can protect yourself by investing in government securities in the UK. You can't protect yourself by putting money in savings in the bank in the UK. Don't fall for, I see a lot of advertisements for real estate bonds and things like that, promising 5-6%. I personally wouldn't touch that, because if the government can give you only 1%, 5-6% is too much. Not that it's not a bad thing to have a high yield, but it's very risky. That means your capital would be at great risk. So let's go more into the statistics here. Let's have a look at some more of the U.S. statistics. On Thursday, we had some more U.S. numbers. The one that caught my attention was the manufacturing PMI that came out. That was expected to be at 52.5. And don't forget, the PMI number is Purchasing Managers Index. It's a survey, and the way it works is if the number is above 50, it means the manufacturing sector is expanding. If it's at below 50, it means it's contracting. So that number came out at 50.6. It was expected 52.5. Previous month was 52.6. So almost, near 50, which isn't great. Service PMI, service sector PMI, that came out at 50.9. It was expected 53.2. This is all for May, so we're going to have to see in June if those numbers rebound or go below 50. That would be a very bad sign as well. And then we got new home sales, another housing number that was expected to drop 2.8%. It dropped 6.9. And granted, the previous number was revised up, but still not a great set of numbers there or statistics for the U.S. economy. So did we have anything else? Yeah, Friday we had durable goods. Durable goods as well was quite weak. It came out at, let's have a look. durable goods order dropped 2.1%, was expected to drop 2%. There's another one that people look at, goods orders, non-defense, ex-air. I guess that means, you know, the Boeing. And that was down 0.9% and was expected down 0.3%. So as you can see there, the yield curve has been telegraphing us a weakening economy for the last few months, and it looks like we're starting to see that. So what about, quickly, let's see what Williams from Shadow Stats is saying. This is what he's saying about the GDP, and I'll just read the last section of the first paragraph he's got here. It says, suggesting a 2Q 2019 real GDP contraction and downside revision to first quarter 2019 GDP. Manufacturing turned negative year to year for the first time since 2015. As you can see here, John Williams, you can pause this video and read through this, or you can go to shadowstats.com and read it. He's saying here that looking at those statistics I talked about, for him it looks like GDP is actually going to be negative or contract for the second quarter. Let's quickly look at some of the charts then. For gold first. So gold had a pretty good end of the week. We closed around 1285, but as you can see here on the weekly chart going back 5 years, gold still smack in the middle of a range, basically between 1200, I would say roughly, and 1350. I know we went down to 1045 in the end of December 2015, but so I guess on the upside until we break through 1375, which was the high from the 4th of July 2016. Gold's still going to stay pretty neutral in US dollars. What about silver? Well, silver, I did two charts. First one is a monthly chart going back like, let's see, yeah, 20 years. And we had a relatively good close last week. But as you can see here on this monthly chart, silver still looks very depressed. Doesn't look like it's going anywhere. But one thing I'd say, at roughly around 15, if you look back, before 2004 to 2003, silver was below $5. So it's still, in the last 20 years, has been a good store of value. It's gone up more than 300% or thereabouts. I know it has come off quite a bit from that high we had near 50 back in April of 2011. But we'll see. One thing about silver I like to show you is that, and I think King World News covered this, and I don't want to say that this is gonna make silver go through the moon, because I don't like to give people false hopes or anything like that. But you can see here the latest CFTC report that came out Friday night, last night. You can see that the shorts closed their short position in silver, the commercials, by almost 3,500, and they increased their longs by 4,112. And we can see here that the total long by the commercials is almost even with the total shorts. So it will be interesting next week to see if the commercials finally go long silver. That could be a good indicator of maybe silver, taking off a little bit from this moribund or depressed levels. Okay, just to finish off then, just go through quickly through this headline here, the great jobs boom. I mean, I read the leader or the small article in the beginning about this, and basically what they're saying is that capitalism is doing well. that, flexible labor markets are helping. They do admit that there's a lot of job insecurity. There's a lot of low paid jobs. There's the gig economy. There's temporary work. But the way they talk about it is as if we have capitalism. And I don't agree with the economist. I think government is still too big, not only in the UK or in Europe, but even in the US. Government is still crowding out private investment. What does that mean? Well, government is still running huge budget deficits, especially in the US, still running deficits in the UK. Interest rates are, real interest rates are negative, I would say, everywhere. If there was a great job boom, everything would be great. Interest rates would be back to 5-6%. People wouldn't still be talking about negative interest rates or QE. So I think this is just like I don't think the economist is living in the real world. If you enjoyed this weekend report or this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you share my video far and wide if you think other people would enjoy this kind of content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great long weekend here in the UK and also in the US. I think it's Memorial Day on Monday. So the markets are going to be very quiet on Monday, but I will be following things and making a video. Have a great long weekend. Take care. Bye.